Goedemorgen.
Good morning, everyone. Again, good morning, ladies and gentlemen. I bid you a warm welcome to this meeting, general meeting of shareholders of NIBC Holding. It is our very first general meeting of shareholders since we became a listed company in March of last year. We had an extraordinary meeting of shareholders in the interim to appoint 2 supervisory board members, but this is the very first time that we are here in full force. As customary, we start with a small clip, just as a warm-up. And I'm now asking the technicians to start up this clip.
Reflection on where you and your business have come from and where you're going. Reflection on who you need to help you grow. Reflection on the essence of partnership. Do you seek someone who, at the end of the road, understands your goals? Or someone who commits to them from the beginning, putting their money where their mouth is, muddy shoes and all? Reflection on the professionalism you may expect from your financial partners. Should that be limited to their profession? Or also focus on yours? Reflection on the difference between now and new. Do you seek funding just to run your business? Or financing to fundamentally reinvent your passion into something new? Perhaps most of all, reflection on the essence of entrepreneurship. Seeing things others can't. Wishing things others won't, doing things others don't. At NIBC, we have been enabling growth ever since we were founded, building a nation. And we grew not by only advocating caution, but by always embracing challenge. We hate to say no and love to think yes. It's just how we do things. For us, that's the essence of what we do. So that our corporate and consumer clients know that they are backed up by people with the right mentality, helping them to reflect on the future, on their most decisive moments, sharing their vision, reflecting their values, creative and inventive, and with a range of tailor-made financial services. We believe it's always time for reflection. Time for our realities to mirror your ambitions. Time, once again, to think yes.
Oh, and now you have this picture, beautiful clip, and then this face. I'm sorry, I didn't want to let you down. But this is the chair of the supervisory board. Sitting behind the table next to me, we have Mr. Sluimers. He's the vice chair of the supervisory board. To my left hand, you have Mr. De Wild, the CEO, and Mr. Dijkhuizen, the CFO. Repeating the terms in English, we chose a smaller setup. But it doesn't mean that the other people who are responsible to you wouldn't want to be present. We have the other supervisory board members and we have the members of the executive committee. As far as the supervisory board is concerned, we have Mrs. Zijderveld and Kemna. You appointed them last year as a supervisory board member. In addition, we have Mr. Flowers, Krishner, and Carrion. Let's see. And that is also, they're also part of the supervisory board, and they're affiliated to J.C. Flowers, the major shareholder, as you know, of this company. Then we also have Mr. Van Riel, the CRO, and the ladies Oosterbaan and Hoeves, and Mr. Kent. And there are non-statutory directors of the executive committee, so not appointed by the General Assembly. Furthermore, she's wearing a red-type dress. She's Mrs. Jensen. She's the secretary of the company. And Judith, may I please ask you to make minutes of this meeting? The minutes will be put together in a usual fashion, and in accordance with the Dutch Corporate Governance Code, you will have 3 months to comment on this draft of the minutes, and where necessary, the minutes will be adopted by me, the chair, and the secretary. This meeting was duly convened on 15 March 2019, registration date 29th of March 2019. In the convocation, the agenda plus all the attachments were made available for inspection, and a copy could be obtained as well, as it should have done. Next slide. This is the agenda and all the items on the agenda we will discuss today. Some of them are to debate, discuss. Some of them are to vote on, voting items. So if we ask you to take a decision, you will be given the opportunity to vote. I would like to propose the following. Once you are given the opportunity to take the floor, please do use microphone 1. There is only one. It is called number 1. It is in the middle, so please use the mic. State your name clearly, so we can write it down correctly in our minutes. The meeting is also recorded, taped, but this tape will only be used to draft the minutes, and we will destroy the tape afterwards. To the extent you are under the impression that not all of your questions were answered sufficiently, there is an item on the agenda, further transactions to be conducted, further business to be conducted, and please save your questions until that round. Next slide. I already told you that the meeting is recorded. This was for the purposes of drafting the meeting. The language of this meeting is in Dutch, but there are headsets available if you do speak English, and there is simultaneous translation for those people who would like to listen to the English. Now, the number of shares, I can tell you that we have 147,513,369 ordinary shares. That's the issued capital in NIBC Holding NV, and today for this meeting, 126,818,367,752 shares registered for this meeting. And please calculate the percentage. Could somebody please do this for me? But I believe it is around 70% or so. And out of the shares represented here today, proxy voting has been given to Allen and Overy, and 126,000 million of shares are represented here physically. Now those proxy votes will be issued or used by Allen Overy, and we have Ms. Roosendaal. Perhaps you can raise your hand so we all know who you are. We get back to you when we are voting. So if there are any votes in favor, against, or abstentions, I will look at all of you, but specifically I will look at Ms. Roosendaal. All the formalities to have this meeting have been complied with, so we can adopt valid resolutions. Voting instructions. All the shareholders present here today received a voting form. Please complete this form. That is, if you want to participate in the voting process. Voting will be by raise of hands, and we will actually determine whether there's a majority of votes in favor or not, but we will see that when we come to it. I kindly request you to please complete the form. That's how you issue your vote, cast your vote, and please return the form to the secretary so we can have a precise count how many votes were cast in favor, against, and abstentions. And we will disclose the results on the website so that the public knows what happened and that we were actually transparent during this meeting. Practical information, please turn off your cell phones, at least to such an extent it doesn't bother me. And perhaps the other people here also don't wish to be bothered by your phone, that would be pleasant. So, if there are no further comments, I would like to invite Mr. De Wild to talk about the annual report 2018. Paulus, the floor is yours. Chair, thank you very much. I also have a picture. So the very first slide are some of the newspapers' headings. And we're happy with the press. So we don't do quarterly updates. We are only looking back. Everything should already be familiar to you, but I want to paint a picture. What is it that we do day in, day out, but we cannot provide you with forward-looking statements. We had a record here that you even received an interim dividend because of our sales in the UK. So we try to satisfy all of our stakeholders. Moving on to the next slide. This is what we look at the most, what happens around us, because we're dependent on what happens around us. We can manage ourselves, but we are part of the system, the outside world. And what you see is a mixed bag. We have the Netherlands. The Netherlands is doing well, economy, unemployment rates, house prices are rising. We're heading in the right direction. But if you look at the world around us, well, there are some challenges for any bank. The first is the long-term low interest rates. Small difference between the short-term and the long-term interest rate, not ideal for a bank to make money. And it seems that the low for lumber becomes longer all the time.
Dat de curve alweer zou stijgen. Inmiddels.
We thought that the curve would going up, but if I look around us, many people are convinced that it will take longer and longer rather than shorter and shorter. That's the days of low interest rates. Turn of the cycle, that is something else that we talk about a lot. Where is the economy heading? Is it an upward trend or will it level off? And can we expect a downturn, a recession, a crisis, or whatever word you would like to use? It's always very difficult because if you respond too early, you're losing out on opportunities. If you're late, you end up in problems. But those are things that we carefully consider every day. So we try to forecast our profit in a sustainable manner. Where are we in this graph? And it's different for our business units. Some of them are cyclical. And as the executive committee, we try to bring everything together and try and have a stable picture where the pros and the cons can be set off against one another. Regulatory control, the legislator, the regulator, and that is a topic that is high on the priority, a high priority for any bank. You need to know your customer, you're all familiar with that, what kind of structure, where do our clients get the money from? And sometimes it's very difficult to demonstrate the source of those funds, structures, how they operate. Then we have the money laundering debate, and that definitely made the press. Of course, in all of these topics, we're closely involved, but our business model is less vulnerable. As you know, we don't do any payment transactions. There's no flows going from A to B, so the money laundering debate is less prominent in our business than if you are a general structural bank. Of course, we want to be in control of everything that we need to be in control of according to the legislator. And these are the big themes that we look at every time so we can produce a sustainable result for you as stakeholders and for us as the board. In brief, I want to talk about our two business units. We have the corporate side and the retail side of the business. Corporate side, financially, it was a record year in terms of number of transactions, interactions with our customers. You see that in the graph on the left, 3.7 billion in transactions, new transactions and refinancing of current customers. Sometimes they needed to restructure, but it's a lot more than 3.1. So a higher number of transactions with more customers. So 10 billion, that is our balance. and that is adjusted and unadjusted. And to the right side, we're very happy with our high Net Promoter Score. We talked about customer satisfaction expressed in this number, and 63% is satisfactory to us. We believe it's high, and we believe that our customers will return to us even without payment transactions. We're not in the flow, so whenever we do business with our customers, it may take 2 or 3 years before they come back. So you need to create history, because a happy customer will come back to you. Sustainability side, we are very active to make sure that we can do the right things with our customers and with our business model. We have ISS UCAM and Sustainalytics C+. I always thought A was the best. True. But if you're graded, C+ is probably the best you can get in the world right now. So we can all move forwards. There's room for progress. But in this market, C+ is the highest category right now, and Sustainalytics, 72 out of 100, a comfortable grade for all of us. And there are other topics that are relevant to us in which we play a role. That brings me to the retail client offering. That's the other side of our business. It's saving and investment. You already saw that low for longer has a saving effect because the interest rates are low. Looking at mortgages, a record year again, 3.4 billion in new mortgage and an extension of mortgages as well. So we grew tremendously in terms of mortgage origination, and we were in time by seeing that the preference of our customers shifted. 10 years ago, people wanted a mortgage with a term for a fixed interest rate for 10 years. Now 20 years, because the lower the interest rate is, the longer people want to have a term for that low interest rate. Now it's even 30 years, and that's not how a bank is put together, especially looking at the low interest rates. Now, there is another part of the world very interested in our mortgage market. The insurance company, the pension companies, they are happy with a 30-year maturity or a fixed interest rate period of 30 years. So we finally found a party, AXA disclosed, and they do the 20, 30 years mortgage loan for us. So they provide the long funding that we cannot provide, and they also accepted our risk. So we're the lender of record, we're the service provider, and this is how you see us in the land registry in the Netherlands. We are the mortgage lender. We answer the phone, but we make sure that it's off balance. The funding is elsewhere. So we showed that we are an entrepreneurial bank, and we look at what our customers want, where are they going to, and if they change, can we move with them and still offer them the services that they need. And we were happy to achieve that. The colors will tell. The red part, that is AXO secured, if you will. And in November, our ambition for this year is 5 billion in terms of a mandate from AXO. And we're also talking to other parties to see if there's any room for expansion. It's important for the bank that we can follow our clients, profitability of the bank. We need to look at interest revenues, mortgages kept by ourselves, but those mortgages that are basically passed on to AXO, that we do get a decent fee. And those fees are guaranteed for the next 20 or 30 years. So that's a stable income flow for the bank, making us less dependent on what happens to the interest rate. And that's a balance we continuously seek. Interest income on the one hand, commissions on the other hand. NPS, wonderful score, 7.7. A little bit different per country, but we even ended up over 8 when it comes to mortgages. So we are confident we can help more customers with their mortgage needs. Now, of course, the money laundering debate, the regulations in respect of know your client, very relevant here as well. And you probably are familiar with the campaign Aflossingsblij, happy about repaying, early repayment. That was the campaign. There are customers who have interest-only loans, and some of our customers are close to the retirement. They will see a drop in their income, and yet they still have to repay their mortgage because they paid interest only. And in a negative equity situation, if your home is worth more than your loan, everything will work out. But in negative equity situations, it's the other way around. Income drops, you have to repay your loan is higher than the value of your home, and we need to come up with something to solve that problem that is looming over their heads. So those are activities that the bank performs that are not very visible, but it places a demand on our capacity. We need to approach those customers actively and come up with a solution. Some customers want to do their own thing. They're not happy with us showing up. Others are very happy with the dialogue and hopefully prevent a problem for them going forward. Strategic priorities. There's a lot on paper, but these are slides from existing presentations, because we don't want to share new information if we're not allowed to. So these are disclosed on our website. 6 points. They are in English. Let me summarize them for you. Continuous evolution of client franchise. We work for customers. Customers change because of legislation, interest rates. Maybe customers are shifting their preference around, but it is about that customers and those customers and finding the right balance and help them grow. That's what we're about. We try to come up with fun things for customers, allowing them to grow. Number 2. We're looking in our core markets, Germany, England, the Netherlands, Nordics. It's about diversification of income. And I talked about the EXO situation where we go from interest revenues to commission fees. And we want to have a stable income flow going forward next 20 to 30 years. But we can't do it without our employees. That's number 4. We are a very agile company. We trust our employees. We delegate tasks to them. But we must make sure that we do everything we're supposed to do as demanded by our legislator. And it's our mentality to come up with solutions quickly. It's in the interest of our customers and our own interests. We like to do great new things for customers rather than checking that everything we have in place meets the demands and requirements. And you want to have a clear dialogue with your customers, make sure that compliance is dealt with, and have a fun debate about what's possible and hopefully giving rise to a new transaction. So all the admin, it is quite a lot. I have to be honest about that. Now, investing in our customers and in our people, we want to make sure that our staff is future-proof. It's not just about going to an international business school. We are a small bank, so we actively need to seek out talent and bring them in to understand them better so they have a better understanding. They can talk to customers about global trends, and we're all familiar with those trends. What is the effect on our customer base? Can we actually think about what our customers are doing strategically so we know where the potential for growth is with them and we can accommodate? We spend a lot of money on training our employees, 3,000 euros, and 2,000 can be spent freely by them on any type of course that they want to do, except maybe for hobby activities such as working with clay, ceramics. And they use that budget wisely so they can actually accommodate the needs of our customers. CFO then. This is something that our CFO will talk about more. Funding improved. Our capital position is very strong. And hopefully you value that we will pay you 36 cents after today. And that's a fantastic dividend. That's it for me. And Herman will now take over the floor. Questions afterwards or questions now?
Goed, Paulus, dankjewel.
Right. Paulus, thank you. I understand that you all want me to address funding, but let me start with something else. I would like to start by showing you a slide on share price and share price development. I think it's very interesting to look at share price and where we all got in and got on board and see how that price developed and how I perceive it as a CFO. To be honest, we do not focus permanently on share price. We don't look at share price development on the short term. It's just a moment on the stock exchange, and we try to be sustainable as a bank for the long term and to comply with the criteria. I think that's the most important part. You look at it, you look at share price, it's not what drives us. At the same time, if you start at 875, which was the moment of IPO, and look at where we are now, yesterday we closed at 898. Great. It's 36 cents as final dividend, like Paul has already said, but it is important also to look at what has happened in the meantime. And if you look at that, you see a clear number of steps. Our majority shareholder, first of all, decided on the 5th of March to issue a second tier, and that was done, and it has had an influence, because if you look at that in the period before that, a trading day, an average trading day, the number of shares that was traded, at that moment it was 120,000, and if you look at it now, it's about 40% higher. And especially liquidity in shares is very important. It makes sure that the stock exchange is dynamic. It's very important. You see it, it works, and it's a great step towards the right way. Then, looking at finances, and I hope you can see it. It's the exact same figures as the financial statements in the annual report. It's the past, obviously. It's last year. But if you look at this, it is a second year in a row of above 200 million. Then you can do two things. You can look at who you are, what you're doing, and you can be satisfied, or you are critical. And what we did is really look into the things that we won't see back last year, because next year, well, recurring items, you see the underlying rationale is much better. It means that we now end up at 197 million, which is still an excellent result, and it leads to a plus return on equity. Great. And some special items as well, if we look at it. And let me first start with the operating income. If you look at the operating income, we have had some tailwind because of the economy, and it was a conscious decision too. So whenever you can influence, you try to influence things by saying, look at our assets, looking at what is on the balance, and then looking at how you should consider things. And when you're at the top of the economy, and we were successful in a number of investments when we looked at that. And this means that we have achieved 37 million in extra sales in our portfolio, and Paul has referred to that as the special dividend that we offered of 25 cents. And it's 35 million, and that did not exactly end up on the 25 cents, but we just topped that up. So then the top line of the bank again looks great. So a steady interest income, of course, supported by the IFRS 9 effect. And also the fees worked out really well. We helped JC Flowers with the transaction with the AHSA, and of course disclosed that we realized 7 million in fees. It's also important to see that our strategy originate to manage. So Paulus already showed something about that. Also in the P&L, it shows a very clear plus. So you see that the fee side is also supported by activities, as I've just demonstrated. And of some minuses too. IPO costs of 9 million. We do not expect them, of course, because we will not do that again. So that's a one-off, non-recurring. And I think it's important to mention that. Also, it's good to say that majority shareholders are not included in the 9 million because they've paid those fees themselves. And then last but not least, if you're doing well, then you see that you achieve things. And I now refer to our tax position. And at this moment, we are really able to look at deferred tax assets, so latent tax provisions, well, we could include that, a 17 million item in the P&L. And if you exclude that, it's 173 million, and it really reflects our good return on equity, and that is neat. And that is in line with our medium-term objectives. Then, let's look at some other things, and I think everything was addressed already. First of all, the positive IFRS 9 effect in the field of NIM, and the net interest margin, showing the difference of what we loan to our customers and our funding on the other side. And in the end, of course, there needs to be a positive side to that. And as you can see, there was a very positive development there. There is an effect again of IFRS 9, but if you exclude that, then again, looking at the base points, we grow to 184, and we are very satisfied with that. It has to do with a number of things. Of course, the client side's doing well, but also relating to the fact that funding costs were reduced from way over 80 to less than 73 at year end, and that is an excellent step. I've said before that there was not a lot of room to maneuver in the world around us, because we really expected that there was going to be an increase in interest. We saw that in January. It was an extremely difficult funding month. January, February was quite extraordinary. And now you see that the world is settling and is calming down, which is very important to us, of course, to be able to build that funding. And in 2019, we actually used that opportunity to do two things. Again, a long-term funding, comfort bond, which is a package of mortgages, and basically this covers the loan. And then if you look at that, we were very satisfied to be able to place that. And we used that part of the funding to look at the long-term side and optimize that. Also last year, some long-term transactions took place, 10 years maturity, making sure that we have settled books and balances, making sure that you lock in your funding costs for a longer term. I think that's important to convey to you today. Then, looking at the other side of this slide, is this cost-income ratio. We manage the bank, like Paula said, we manage a lot of values, and it focuses on entrepreneurial and inventive. And you have to be as lean and mean as you can be, and agile, of course. You don't want to have any bureaucracy, and that is really reflected in this cost-income ratio. So that part of empowerment towards our staff makes sure that they can do what we need them to do. Doesn't mean that we don't invest to bring down that cost-income ratio. We permanently invest, and we make sure that we do everything we need to do, and that is very important. The funding side, then. I addressed a couple of issues, things that we did in 2019. Again, we will use as much as we can, everything the market offers to us, to make sure that we also focus on the long term. I get these questions. You have a lot of cash on your balance sheet, for example. Why? Yes, our LCI, that's a great way to express that, is above 200, which is high in relation to many other players. And that's a conscious decision. We look at the market around us. We saw a lot of uneasiness. And you don't want to be dependent as a bank to actually need that market. You want to have that autonomy yourself and that discretion yourself. So we always want to have more cash than any other bank because it gives a good feeling, and it makes sure that you get a good night's sleep, also in times of crisis. Looking at the capital then, CET1, that's always expressed in this way. That's your core capital based on what you see there. If you look at that, it's 18.5. We are very strong when it comes to capitalization. Maybe someone says you're overcapitalized, but no. If you look at the market again and the developments, you need that capitalization. It just gives us a very comfortable feeling. It should give you as a shareholder a very comfortable feeling, and it offers us the possibility to play into regulatory issues that might come our way. and to be able to absorb the consequences of regulatory decisions. It gives us flexibility, it gives us the dynamics, and it gives us also the possibility to pay out dividend in the future. And you see that in the dividend curve as well. If you look at what has happened over the past time, when we had our IPO, that we promised that our ambition was to pay out at least 35 cents. And at the same time, investors have said, okay, but if you have something special, are you willing to make that extra step and make that extra effort? Yes. So with the sales of the NIBC, that was the 25 cents extra that we provided to you. And then the second interim dividend, or special dividend, if you will. And again, 50% dividend was paid out, which is our medium-term objective obtained in 2018 already. Before I start this, and you probably are saying, oh, it's only hallelujah, where are the challenges for the CFO? Of course we have challenges, because I wouldn't be here if no challenges were there. Well, look at this. We wanted to disclose these items in our annual accounts. First of all, IT. In 2016, we have started an outsourcing process. This did not lead to the desired outcome. And sure, of course you need to take your chances, and we decided to no longer pursue that process. This resulted in a new situation in 2017, 2018, and we brought back the infrastructure to the bank. Of course, this has led to extra costs and extra pressure on the organization, and we decided to contract a new party. It's CGK, a new party contracted, and we now have firm deadlines, and we make sure that we now have a very strong infrastructure, and a bank can't do that itself. Everything's right on track, and we said that in the second half of 2019 this process will be finalized with the external party. Then looking to my left, the accountant, these two topics were included in the unqualified opinion. Other items, things that I did not invent, but we have to deal with, and it asks a lot of us, and Ernst & Young will address it, but if you want to do this and you really want to implement IFRS 9, it is very demanding in a year's time, because it requires a bank to look at it in a different way to your assets and whether you need provisions for that, yes or no. And, you know, we had that flexibility and discretion ourselves before, but now we are forced by regulatory rules, and it's quite a lot of them. And this resulted in a meticulous process as an organization. In 2018, we really focused on that, and we dedicated a lot of time towards that, not only the external accountant, but also we as an organization. And then last but not least, Paulus referred to that, KYC. And we were lucky to have had a visit by the Dutch National Bank, and also talking about the integrity risks. And an honest answer, there's always room for improvement. A world in which rules and demands are more and more strict, because what was good yesterday is not good enough today anymore. Again, always room for improvement. And what really helps us is that we don't have any payment traffic. And this really helps us to comply. And we are in control. We are right on track to deliver on our promise, and I think that's the most important thing. We take things very seriously. We look at know your customer behavior, and we know where we go, and we, again, will deliver what we promise. That brings me back to this slide. Looking again at your promises and promises fulfilled, I think it's important for you as a shareholder, but also for us. And again, what is our position? Yes, we delivered what we promised in our IPO, and we were lucky, because without some tailwind and a little bit of luck, nobody makes it in this world. And if you just focus on these things, return on equity, 10.8, but a total of 13.6, sorry. Cost to income, again, 45, sustainable, right? And we invest. I said something about IFRS 9, IT. All these things relate to cost to income. So what you see is a very common, fully loaded, what you see, what you get. CET1 of at least 14, that's what we promised. And now we are at 18.5. So it provides us with all the room to maneuver and also pay out dividend, etc. And if you look at the capital ratios, we are very comfortable. Dividend, as promised, 58%. Don't expect that this will always be the new starting point for the future. That'll still be 50%. Again, we will again start with 50 because this is what we promised, and the extra 8 was, 25 cents that you got. That's just managing your expectations here. But what we did say is that we are very, very confident that under normal circumstances, that is typically what a CFO would say, right? Under normal circumstances, we do intend to pay out every 6 months that 25 cents, at least for this year. And then you see a maybe in amber. This is correct. We have senior non-preferred. That's an instrument that we issued. It's between equity and preferred seniors, so loans that you issue to the market, has led to the fact that rating agencies look at us in a different way, which means that Fitch has upgraded us to BBB+. That's great. It'll help us in the future. And we expect S&P to rate us a BBB flat positive outlook based on the fact that we have these things. And they would actually come back to us, and they will do that in the very short term. But I don't know when they will visit us again. And I think that is what I wanted to convey to the meeting, Mr. Chair. Ladies and gentlemen, you have now had the presentations of the annual report of the Management Board. You now have the opportunity to ask questions. I would like to remind you that if you have very specific questions on the annual accounts, under item 3 on the agenda, we have the possibility, but resulting from these presentations, do you have any question? Who would like to take the floor? Yes, Mr. Links, please take the microphone. I have no choice because it's only one microphone. Is it working? Yes, it is. Yes. I came up with some things myself at home. Risks. You talked about interest. In January, nothing happened when it comes to interest rates. If you asked me 10 to 15 years ago, I would have said it is very unlikely that this is going to happen in my life, but it is happening. And now we all have gotten used to these interest rates, and now interest of 0%. Will this last? And again, risks, right? Means that something happens, something unexpected, and then the interest goes from 0 to 3 or 4. And then if this is going to happen, my question is, because this is a possibility and it will happen, we're pretty sure, we don't know when. How are you prepared to handle that? What kind of consequences would this have for the bank? If you're all of a sudden back at the level, which would be the normal level of what we already should have, like 3 to 4%, because 0, according to what I believe, is not common. It's uncommon. And the second thing I wish to address and talk to you about is how you deal with regulators. I think we all saw ING, a lot of things happened and many customers cancelled their contracts. And everyone was making promises, and you refer to a visit that the Dutch National Bank made, and again, you have no money laundering issues yet, so it was very clear, and ING was just in a not so positive position. But again, you have to incur costs as well to prevent things from happening. And, you need staff to focus on that. The CEO of ING said that worldwide he had to employ 2,500 people to focus on those rules and regulations. And then attracting funding. You said a number of things about that. Last year, you focused on attracting savings. And that is short-term money, isn't it? And how can you attract that money? Because in the old days, it was very easy. If you offered 1% more than ABN and Rabobank, then the money came flooding towards you. But now, Rabobank is 0 and you pay 1%, and then you make a loss if you offer 1% in interest. So A, how do you attract new savings, whereas you can't stand out by giving extra interest? And 2, aren't these savings a risk because it's short-term money, and you are all bragging about your long-term obligations that you've entered into because your customers wish to have a 0% advantage in interest rate for 20 to 30 years. So then actually savings become a burden, especially when the interest rate goes up, relating to the first question that I already conveyed to you. And then the final thing, I don't know if you have considered this, but the big banks like ING and ABN AMRO are now going into the fintech companies, and they focus on artificial intelligence, and it's scary. So it means that you'll have programs in your computer who are self-learning, and they will determine how much money you can have as a loan. And I feel that these fintech companies wouldn't know what these programs are doing exactly. And as a customer, you wouldn't have any chances for recovery. As to when computers start deciding what you can take as a loan. ABN AMRO and ING, they're all saying, because I asked this question last year, that they don't see that risk, they don't see any danger, but for me, it's eerie. Thank you.
De ronde andere meneer Jorna.
Dank u, voorzitter.
Thank you, Chair. André Jorna of the VEB. Yes, I do share that same feeling with Mr. Rings, but I have that when I fill out my tax return, because in the end I see an amount that I have to pay, and how they calculate that, I do trust them completely. It's just a different perspective, isn't it? Yes, Chair. Looking at the interest income increased, I think I calculated 21% from 164 to 211, but IFRS was in the middle of that. And my question is, do you accept the fact that you have a higher risk than other banks when it comes to that? And in that sense, if not only the interest rates go up and you no longer have tailwind but a headwind, because if you see that now there's the lowest percentage in credit risks, so that headwind will be then full on in your face because you've accepted those high risks. Fintech was addressed already. You are now divesting in the offshore energy, but if you are with SBM and Boskalis and also with Van Oort and the wind energy, you see that we have now passed the low and we're now on the increase, and they are now very optimistic and they start a new episode. But you are divesting. And you said that you need to divest when it's at a high, and you have divested at a low. And then again, you invest. We see a lot of startups when it comes to fintech. And we all know that there is a jewel amongst those fintechs. Do you know what the jewel is? Because we need to know. One of the jewels should be Trimac. You invest. It is a minority share. Why not a majority share? Did Trimax not allow this? And it's a supplier to the chip market. To whom do they supply? Another service that you provide, it's page 24 of your own annual report. One of the growth drivers is financing claims that fintech companies have. Is it something, receivables, is it something that you're going to develop, or are you just providing it as a service for funding? And this is my final question, and then you can bundle the whole package there. Yeah, and then we will have the rebound opportunity. Has Noordbank, the regulator or the Dutch National Bank, did they make any remarks? You were an advisor, and if I'm not mistaken, you received 4 million for that. And also the funds of majority shareholder Flowers, you have invested 100 million in the funds that funded the takeover of the Haas Noordbank. So you are working as a consultant on that side, and you also helped fund the purchase or acquisition. Isn't that a conflict of interest? Thank you. You will all have the opportunity in the second round to ask your questions, but to make sure that we address all the issues raised, because now we have some 9 issues that we need to address, we will do that first. First, the issue of interest. Yes, it's low. Interest rates are low. And it is going to change. Or suppose, what influence does it have on the position of NIBC? Herman, please. Yes, I would love to. I think it's a very good question. And it's always one of our concerns too. So it would, of course, be strange if we didn't focus on that at all. But what I can tell you right now is that the financial impact of 100 basis points per shift, it might not even say something to you. It's the only thing that we disclose, meaning about 113 million. If you look at the equity of a bank or a profit and loss account, this is very limited. Just to reassure you, we have no large mismatch positions. We see interest and as one of the things that we actively look into, and we take it easy. And we do not want to make our sales with mismatch positions or anything of that like. And we don't have a vision on interest rate, which means that all business is 100% hedged to central. It's a decision, it's a choice, a conscious decision that we made, and we fully back that. Is it a risk? Yes, Mr. Rinks and Mr. Jorna, it's always a risk, but we believe that we cover that risk.
So, Mr. Ring's comment about the 2,500 people to focus on legislation. We don't have 2,500 people, but Mr. Dijkhuizen probably has a more precise answer. Yes, we definitely do not employ 2,500 people to check everything. What we did consciously is the following. In the annual report and during this meeting, we just talk about this topic because it is a topic that is relevant. Shareholders want to know about it. It's a priority for them, and we understand it. It's also a priority for us. We consciously decided to let the business handle things themselves. And that's not always great fun, and not everybody enjoys this either. Because if you have to go to a customer and you have to say, can I please check your passport again? Can I get a copy? This, that, and the other. And that is never fun. Sometimes the structures behind it are complex. As I said later or earlier, we also have funding in Germany. Institutional money is involved. Fantastic. Large communities are involved. And who is the UBO of the large community? Is it the mayor? And if you ask 3 times, please show me your passport, Mr. Mayor, then he's not amused. So the ultimate beneficial owner, right? And they don't like complying with all the red tape. But 600 customers, the good thing is that going forward, don't always just sweep, use your broom, do the things you need to do from the get-go. So you keep the cost of failing low. So we are doing it ourselves. We don't need 2,500 people, and we believe we can comply with everything within the time set for it. Thank you. The comment about the savings and competition with the major banks. How do we attract savings? Herman. I think we're doing fine. That's what my CEO just told me, Paulus. Savings, it is an issue. And thank you for asking that question, because if you go to rating agencies, they always say, you have too much funding of this type, and that's what we hear in the capital market. So we made a conscious choice to enter the capital market for long term. Sometimes we have a 2 years transaction, floating rate, couple of million, 100 million, but all of our transactions extend the period exceeding 5 years. That wasn't possible a couple of years ago. We now can have 5 covered bonds of 10. And that's why we do this for the long term on the wholesale side. During the observations, you talked about long-term assets, but those assets are mortgages for a max of 20 years. There's a limit, never 30. It really is limited. Anything exceeding that period will be moved to EXO. So for the longer term, we have our OTM partners. And that's very important for you to know. And you're right, I believe. Recently, publicly, we did some campaigns around attracting savings in Netherlands, Germany, and Belgium. Interesting, because you immediately saw inflow. So we just tried it out. It was a pilot. We could allow ourselves to do it looking at our income statement. So do it when it is possible. You can try it out. Does it work? Does it not work? For your understanding, when we started with savings, we paid 5.25%. For savings, it seemed rather a high rate. But the Euribor at that time was 5.1, so it actually cost us money, but not that much. Now, if I pay you 25 base points, or to myself or to whomever, at Euribor, it is minus 40. So savings is very costly, extremely costly. When it drops down to 0 or goes to 0, you don't see banks moving. But after that, you will see a development. Inaudible to the interpreter, please use the mic. True. Our campaigns were not exorbitant. We believe they were wise. And you do see inflow. Inaudible to the interpreter, please do use the mic. Answer, yes, you do see a nice inflow, and it's interesting to notice that. I won't discuss that. That is future. Those are future matters. Fintechs. Artificial intelligence, should we be scared? That was the first part. Jorna, yes, we do invest in fintech companies. And you had some questions about it. Paulus. Well, maybe I can try and lump some countries together. Let's look at our investment portfolio first. In the past, we invested in large funds. We sold that fund to the UK, and we're phasing that out. And we're using our equity investments to directly help our customers by direct individual investments. Consequence is the minority stake in a fast-growing company. So we try to help fast-growing companies to actually create momentum. We can provide a loan, a subordinated loan, or actually invest in their equity. So we make conscious choices, helping our customers grow into the next step. So that's at the customer side. And that's how we, as a corporate bank, look at our customer franchises. Fintech, a little bit more nuanced. We're not creating a fintech portfolio because we're doing what we're supposed to be doing. What we have right now is the results based on our relationship with those fintechs. We do finance receivables at those kinds of companies. And maybe I'm generalizing, but most fintech startups don't have a whole lot of equity, but they do have a high financial need because they're fast growing, and that's what we're good at. We can come up with structures from them, and it's a type of factoring. Not standard factoring, but it is factoring nonetheless. These are companies that are at the beginning of their growth potential. So we're funding fintech companies who do need money because they need to finance their debtors, and that actually allows us some insights. What's happening at the back of that door? How are their operations? Are they in control of their operations? Do they have potential for growth? Can they grow? And you can assess the quality of that company. What we also often see is that they do things different from how traditional banks do it. No legacy, they start at zero, and if you are at zero, your decisions are different. So we're learning as we go. So we fund them, we learn, we try to do things together with them, and once you know your customer intimately, you put your faith in that customer, they're fast growing, they do the right things, then of course it's fun to fund their equity as well. Two effects. One, on top of the loan we already gave, we have an additional yield if things do well. That's why we funded them in the first place. And two, they're always company where you talk to the business owner themselves, the guy that runs the business. And if you as a bank are prepared to invest in their equity, skin in the game, you're showing it, and it creates a completely different dynamics, completely different from mere financing. So you develop a partnership with your customers. And it's important to us, not just about lending them money, it's also about learning from them. Artificial intelligence, then, it's a big word, and people have concerns, and it's difficult to make that tangible. What exactly is AI? But if you look at the models, Herman said something about IFRS 9, how we have to put together our reserves. It's all process, logarithms from A to B. So there's not a person behind it. You can get the money or not the money. Everything is put into the computer, and the computer gives us an answer. Scalability, the speed with which our customers demand an answer, requires that we automate our processes. So what is AI? Well, there's some debate around it. How can we move forward? There are call centers that use AI. Customers can't even detect the difference between the robot and the real person, because some things are so protocolized, everything can happen very quickly. And that is why we actually get visits from the DNB about our models. If you put this in, do you get the output you require? So we're backtesting all of our models, and we're very active in that. So yes, we do see all the debate around it. So if you have no idea what you input into a system, you have no idea about your output, so you need to look at both sides. You need to look at your input, and you need to look at your output, and never forget to use common sense. Sometimes we see models spitting out numbers that are so odd, and then we check what are the assumptions, and then we do better. And we work together with the DNB, with the AFM, the Authority for the Financial Markets in the Netherlands, and we try to develop things future-proof. Thank you. Mr. Jorna, he also had a comment about the interest rate spread. You already answered that question, but he also asked, as an aside, what is our level of reserves, contingencies, if you will, and going forward? What is our risk profile? Do we have a different risk profile in terms of our assets? Can anybody say anything about that? Well, I believe if you look at our financial statements and Pillar 3, we disclose quite a bit. I think it's fair to say that with the major banks, you see a lot of A-rated companies. We don't finance A-rated companies. That's not our business. Looking at our profile and our funding, we're more involved in the small, medium-sized companies, and the pricing is different. And you see that reflected on one of the pages that shows the interest corporate bank 2.9%, right? Right. Mr. Jorna, would you like to get back to that? Yes, please. I read such a wonderful example, and it was about mortgages. You were actually capable to fund a medic, a trainee, and to give him a mortgage. So this is a person wants to become a doctor, and you're ready to provide funding to him. And it's great if you're a resident, right? You could also say we don't have belief in that person. He may never be a full-blown doctor. So what kind of risk do you accept? Who do you fund and who do you not fund? Could you say a bit more about that? Do we need the support of the CEO? Let me try my hand at this. Listen, our business is about risks and yields. Without risks, there's no profit. So we have to accept a certain level of risk to make that profit. And if you look at our profitability, unlike the major banks, we actually allocated money to our reserves. Our results allow us to do so. The 10% plus return underlying can be covered by our regular contingencies. So it doesn't have to be zero to actually turn a profit. So we're involved in all types of businesses, going through all sorts of cycles, and we will create a reserve, a contingency when it's necessary. We have done so. We will continue to do so. So no change. We have a certain level of risk appetite, and we regularly consider that. We review it. What risks are we prepared to take and which ones are we not prepared to take? And we were explicit. If you look at our capitals market days update last year, we were clear. In 2018, we saw that the market became overheated. We predicted that. That's when we started by phasing out and winding down our portfolios, whereas some banks were growing hard at that time. So you all assess, review your risks and your yields in your own way. And that's why we decided to wind it down a bit. In other sectors, mortgages were growing well because we believe the risks are low. This is an ongoing debate, but we follow it closely. Mr. Jorna's comment about our exposure in oil and gas. Offshore energy, that's a broad definition for that matter. Drilling upstream, downstream. You can make it in a catch-all umbrella term, oil, gas, energy, wind. So it covers a wide range of activities. So what do we do in those sectors? Various things. So in various parts of the value chain, we are involved. So some of our portfolio, we're winding it down. Others are built up because there are differences. The oil price recovered. We're no longer at a $40 per barrel, but no, all of our activities are directly related to that price of a barrel of oil. So sometimes you need to look at the value of oil. One-on-one, it follows the price of oil. But if you're at the front end of the process, drilling, so actually creating a well, completely different cycle than the price that you pay for oil at the end. So in total, it's too much for us right now. That's why we're reducing it, and we shared it in our update in November together with our shipping portfolio. But you rightfully said that internally, we continuously talk about, are we at the end of the curve, yay or nay? And that's a debate that our senior people have. They know best where we are, and they have a sensitivity to what we're supposed to do. And maybe we're showing a plus, maybe we're showing a minus. It all depends. It's their debate. Now, what level of risks are we prepared to accept in certain sectors? And we try to find a good combination, a mixed bag of risks. And if we see light at the end of the tunnel, we might just well go for that. So HSE, the transaction, would you like to say something about it? Yes, I'll be happy to say something about this. We played several roles in that transaction, and those roles were strictly kept apart. Like any other participant, we received the request, are you prepared to invest in the next phase of this company, HSA? That was an arm's length debate. We had this transaction reviewed by our party, our committee, that covers independent transactions with shareholders. So we went through all the controls and the checks that we're supposed to go through. As the board, we believed it was a wise investment. If you look at the value and our entry price, we thought it was a smart transaction. We also believed that at that time, we should, and that was the 31st of December, we actually got rid of NIBC, N-E-I-F, and we disposed of that because we wanted to have a certain volume in our investment portfolio. That's also an important aspect. Our commitment is 30 million to the company. That's partly drawn, partially non-drawn. So we don't have any funds in GSF, and that's important. We are in a couple of other smaller funds, and the return is good. Right. Would you like to get back to this, Mr. Jorna? Yes, a question. Trimag, that's your newest acquisition. What did they supply to the chip industry? Is it a fintech, as we know them, or is it a supplier for the chip industry? I have to owe you an answer. I don't know all the level of detail because I don't want to say something where I'm rather correct or precisely correct. So we will try and find an answer to your question and let you know before the end of the meeting. But that gives rise to concern. NIBC invests in a company. They take a minority participation. The CFO has no idea. I am not the CFO, I'm the CEO, and I'm convinced that the people sitting to the right of me are very familiar with what they approved in terms of business of risk, but individual transactions, I don't see it at a detail level. That's not my role, but I believe everything went well, and it is part of our policy to help fast-growing companies grow as well. So you will get a specific answer to your question. That brings me to the second round, and let's start with, my name is Klaas Klein. I have a question, please, about your geographical ambitions. Is it true that your activities outside of the Netherlands are specifically driven by a focus on certain sectors, or is your approach a different one? And moving on from that, you didn't say anything about that, and that's this. Brexit, what are the possible consequences for you? Directly, because of your exposure in that part of the world, or indirectly? No doubt you thought about all of this. And it's a very current topic. And that's all I wanted to ask for now. Any other questions? During the second round, any comments? Anybody? Mr. Jorna? And you, lady, after that? Mr. Jorna, you go first. You're closer to the mic and you're very experienced. You always pick your seat next to the mic. Economies of scale or skill. This is, you refer to it as a cost-income ratio. There's nothing wrong with it. But do you want to achieve a certain skill to compensate any or reinforce any ancillary effects, or to improve your cost-income ratio? That's one thing. The IT landscape, then. You talked about it briefly. But sometimes it takes twice as much, 3 times as expensive, right? That's basically the rule of thumb in IT. You outsourced it, then you took it back, and I'll ask the auditor later. But if an auditor actually makes a comment about it and you included it in your management letter, how worried should we be? And are you in control? Sometimes people went bankrupt because of poor IT or outsourcing of IT. Are you on top of that process? Madam, you raised your hand. Take your time. Move over to the mic. Oh, please don't touch that thing. Jean de Bakker is my name, and I am here to respond to VBDO, the Association of Investors Sustainable Development, and we always ask these sustainability questions. So the climate agreement of Paris. You briefly talked about it, Mr. De Wild, and your ambitions. And those of the government are very relevant, and the consequences for the financial sector. And the VBDO is very happy that you help your customer transition in a zero-emission economy, if you will. Other banks adopted initiative or supported initiative, the platforms, ING, to align their portfolio with the 2 degrees below Celsius in Paris. So how do you support the climate agreement? And are you going to participate in some of the ongoing initiatives? And are you prepared to actually set a target for for the reduction of your CO2 in line with the Paris climate agreement? SDGs. NIBC says we support it. But how? How does your portfolio contribute positively or negative to meet the SDGs? By measuring positive and negative effects, the bank can develop a policy to do better in terms of the SDGs. So the positive and negative impact. Can you commit to investigating this and to set some specific conditions on maybe providing lending and funding to companies? Any other people who would like to take the mic?
This is not the case. Then I hope that answering these questions that we've just had would be enough, and that we can proceed to the next item of the agenda. First of all, geographical ambitions of the bank and the possible effects of a Brexit. Yes, we have organized and structured ourselves according to industries, but also according to geography. But of course, industries are very important to us to know what we can do for our customers. So we always said we are going to stick to the northwestern part of Europe, so the Netherlands, UK, Germany, and we carefully looked into the Nordics because a number of our industries are very active in the Nordics. We have no ambition whatsoever to look towards the south of Europe because we believe that assisting customers means that you need to know the culture. And we do see that the culture is quite different in countries around us compared to the northwest of Europe. So no changes there when it comes to our geographical scope. But we do look at positions. Sometimes we grow a little bit more in one country, then we grow a little bit more in another country, which is not because we're not performing, but we look at opportunities in the market and we try to grab these opportunities whenever they occur. So there is no obligation for one country to grow more than the other. We continuously realize that we need to consider the differences. So regarding geography, if we look at specific geography, meaning Brexit, there are direct and indirect effects. And one of the effects, obviously, is that we talk to the central bank, our regulator. We supply stress tests to them in case of a Brexit. We have already had to apply for a license because if there's a Brexit, as of tomorrow, you need to have a different type of license. So all that preparation is done. We are in control. We have relatively few local businesses in the UK that, in our view, are sensitive to a short-term Brexit. If you look at the indirect effects, we do have an office with staff, and we did look into transferring certain business to the Netherlands, we might have to fly a little bit back and forth, a little bit more. So we have plan A, B, C ready, just in case things go north or south, whatever way. But for now, it has been very difficult to predict anything. So we keep all our options on the table. Thank you. Question of Mr. Jorna on economies of scale and whether we have optimized these processes, or maybe when you have a different scale, you can have a different cost-income ratio. Yes, it's always a difficult question. Let me first say that we always try to be a little bit different compared to the big banks. Not because we want to criticize the big banks, but the worst strategy we could have is become a small big bank. So this means that we have to make sure that we are in that part of the market where we have added value, and we believe that our model, when it comes to professional, entrepreneurial and inventive, our values, we are able to be very lean, creative and professional and service our customers. And it requires us to be very close to our customers, and margins go over volume. We don't have volume goals. We have no goals when it comes to becoming really, really big. We want to be very good for our customers. We want to get best fees, and we want to be very profitable. So margin has priority over volume. And because of our scale, we do not have to defend our market share, because we don't think in market share. And I know that this is quite different compared to big banks. If you have a firm market position of 20, 30, 40% in a market, you are, of course, inclined to defend such a position rather than increase it. And for us, this is different. So we say, yes, cost-income ratio is not because of our scale. And yes, you always refer to economies of scale. The bigger you get, the cheaper it is. But economies of complexity come with economies of scale. Everyone reports directly to the executive committee, and if you compare that to big banks, then there's a minimum of 2 to 3 extra management layers in between. So we try to compensate that by having less bureaucracy and being lean. And if we have more happy customers and more business, yes, we grow, but that is a consequence and not a goal in itself. Yes, Mr. Jorna then again referred to the IT troubles. I think Herman already made some remarks, and you announced that you want to talk to the accountant, or the auditor in this case, about it. Maybe in summary, Herman has already said that we have been working on a modernization of our IT systems together with an external party, and that over the course of time we had to unfortunately conclude that they were not delivering what we had expected. And I think he used terms of, it's good that we tried, but you need to know when you need to stop. So we discontinued that process again. We parted ways, and we then moved on to a new partner. And I think also the supervisory board said it was very important that during that process, the existing system that, of course, services the transaction, that it was always maintained. We never threw away anything. Like, you don't throw away your old shoes before you buy some decent new ones. So if that's sufficient for you, Mr. Jorna, I would like to transfer the rest of your question to the other item on the agenda with the external auditor. And then several remarks by you, Miss. I would like to give the floor to my colleague here. Yes, mentioning the climate agreement of Paris, we support it, and we do support other initiatives in the European territory. TCFD, it's a difficult abbreviation, but we do support it. The financial industry increasingly is involved in initiatives like these, and we do expect that more and more generic standards will occur to calculate CO2 carbon footprint based on actual instead of forecast. In the meantime, we will become part of these initiatives, but it is, of course, a scale of measuring what we're headed towards. But I think everything what we try to do, whether it's about fintech, climate, or other goals, we believe in the end that we want to be future-proof and that we are responsible and that we try to look forward as to what we do. And it all needs to be defendable. When we talk about carbon footprint, we are CO2 neutral. We compensate all the CO2 that we produce to the extent that we can't reduce it. We are continuously working on that, looking at, for example, the remodeling of the office, whether we can do that in the best way possible. It's not only CO2, but also looking at the materials. You know, you talk about circular economy. Maybe we should have a different approach. When we do construction, we know that sometimes you need to tear down what you build, and we need to be sustainable. Then, weighing our risks. For the future, it is important to know whether customers are also serious about their own future. That doesn't only relate to CO2, but a wider field of risks. And in those transitions, we also look at whether we can follow them. Your second question, then, is much more about the Sustainable Development Goals. Me personally, I find it very difficult to connect very specific conditions to that because there are a lot of sustainable development goals and they encompass everything relevant to life. So from poverty to hunger, water supply, education, gender neutrality, peace, freedom. So we chose a number of those, and looking at the merits of it, we look at our policies and strategies, and over the last year we also supported initiatives amongst our staff to get Christmas donations to the food banks. We organize activities for children of deprived families, which is local. So we are active in many fields. For the coming days, I don't know exactly when, but one of these days, maybe I guess it's next week, we will publish our 2018 sustainability report because it's issued later than our annual report, and we will be very transparent and elaborate on the events that we participate in. And we also believe in the practical development of these goals because they're so wide. And one of these I wish like to mention, responsible ship recycling standards. We do not like it that much when ships go to the coasts of Bangladesh to be torn apart without any responsibility. And in all transactions that we do, we want our customers to sign this, and otherwise we don't do this transaction. So in a number of fields, we're very strict because we really believe that it is also part of risk, covering those risks, and we need to have these balanced decisions and processes. And of course, we have other sustainable development goals that we consider in a more general sense. If any other standards are going to be defined, we will definitely be part of these standards and we will comply with those standards. Thank you, Mr. De Wild. Thank you for all of your questions. I would like to conclude that you have used the opportunity well to ask questions based on the report of the Management Board. I would like to close item 2A, meaning that we go to 2B, the report of the Supervisory Board. It's the next slide. It is not really that important where you can find it. It's much more important where it is in the annual report, which is page 94 to 104 in the annual report under the Supervisory Board part in the annual report. And I would just like to highlight the most important parts. Some remarks about the development of the business, basically coming down to this. Of course, we are satisfied as supervisors. It is very important to state that this company, since March, has had a different structure of ownership, IPO, and we have also explained that we have subdivided the tasks within the Supervisory Board in a number of committees that addresses subjects, and that the Supervisory Board advises there in the decision-making process. So you see an overview here of the composition of the Supervisory Board. I would like to remind you that over the past year, Mr. Veenhoff and Mr. de Jong have left. and that Mrs. Kemna and Zijderveld have acceded to the Supervisory Board. And now we will have some items on the agenda. Item 6, we will come back to you because we need to look at the term of Mr. Krisner, and we would like to nominate him and reappoint him as a supervisor. Are there any questions for the report of the Supervisory Board? If not, then I conclude that you have read it with great interest, and then it is a custom to also have a chapter dedicated. We did that 105 to 109 to governance of the company. Some remarks you'll find on slide 24. There we go. And I would like to stress that we have a system here, not a one-tier board, but a two-tier system. Supervisory board, supervising, advising, and an executive part consisting and being responsible for managing the business. And in my introductions, I've already said that we have an executive committee of 6, distincting between non-statutory and statutory directors. 3 non-statutory. We introduced that system a while ago, and it works out fine, and actually reflecting the diversity goals as well. So in general, it's just very good that positions that relate to management, so CFO and CEO, that they work together with those responsible for the business lines, so doing that day-to-day management. So that is something I wanted to mention when it comes to that. Maybe there are questions. If not, I also conclude that you have read this with great interest, and it means that we can go to 2D. It is a report on the implementation of the remuneration policy in 2018. Again, this is a report that has been in a separate item at any AGM. Everything can be found and is quite self-evident. You might have questions, nevertheless, but there's one thing I would like to draw your attention to, which is that when it comes to 2018, this report contains an announcement relating to the Supervisory Board and how it believes remuneration and changes to that should take place. Remuneration policy includes a reassessment of the fixed payments or salaries, and if there is any reason to adjust that, then we can do that. And we have a system in place, meaning that the management board will have a system that is in line with the rest of the staff. And for us, that seems a very attractive system to actually have those reassessments from time to time, which is actually much more appealing than comparing remuneration policies, looking benchmarking and finding discrepancies every 3 to 4 years, and then we had to give large exposés to substantiate that. This is just to prevent large gaps from occurring compared to the market. So this is why we chose to apply this for 2019, and then also announcing that to you. The consequences of that policy for the management board is then translated to policy for the supervisors, because that's a separate item on the agenda, because you as a shareholder decide what you do with the remuneration for the supervisory board. So having said all of that, so based on the remuneration report, are there any questions or remarks? Mr. Jona. Yes. VEB again, Mr. Jona. Yes, it's a very noble goal to stay in line with the rest of the staff when it comes to fixed salary, because it means that everyone is being treated fairly, and it's good. I like it. Did you also consider what Mr. van der Poel has said at the ASR, to only pay fixed salary and, get rid of all the other difficult stuff. Performance management, etc., the incentives on long term, short term, all of that. Wouldn't it be great that all the men on the board have shares, because it means that you're involved? Their profit is our profit, and the reverse if there's a loss. So it will give the right confidence also for Anglo-Saxon investors, but you can have them buy that from their fixed salary. Did you consider that model? And one more remark about the remuneration policy. I think it was addressed by other colleagues as well. Retention payment, that's just not done. You don't need it, you don't want it. The term within which it can be effectuated has now been extended, but that's merely a remark rather than... Thank you. Any other questions or remarks? Yes, miss. Yes, Mr. Bakker. Confidence in the financial industry. If we look at the most recent economic credit crunch, money laundering scandals, I think people do not trust the financial industry, and we see huge salaries. And we, as an organization, we would like to come forward here that a remuneration 2.7 million for someone on the board of a bank with 20 billion on the balance sheet is inappropriate, and that in the times of the current confidence people have, compensations like these are completely out of line for what people expect. So we are wondering whether it is not time that you have a remuneration policy that is within the expectations of all stakeholders. Thank you. Any other remarks about this subject? If not, I am going to try to formulate a response. Second remark of Mr. Jorna was merely just stating it and not enticing a response. That's very comfortable, so I won't respond. The first question, or first remark, did you consider what happened with ASR Bank when it comes to remuneration? Yes, of course we did. We learned about that, and we also exchanged some thoughts about it, whether this would be something for this bank. Two considerations actually made that we postponed such a decision. Well, different here is that alignment between members of the board and shareholders and others was always in place. Also before the IPO, there was always a position in which management had a significant skin in the game, to paraphrase your own remark. So we don't feel that this is necessary right now to formalize that in another system. And you have also been able to see that from time to time, managers also buy shares, and they don't have an obligation. So it's not, for us, it's not an urgent issue. The second thing, which is something that might be important, last year, based on the discussions, or as a result, rather, of discussions revolving around remuneration in ING, there was an industry-wide discussion, and also the Dutch Association of Banks issued a position paper on it, and the Minister of Finance has responded to it, and Parliament responded to it. I think last week there was even a discussion in Parliament about this specific subject, and we are all inclined to say, before we start moving anywhere, we would like to have some sense of security as to what the political view is when it comes to that. So we're waiting for that before we know what to do. Maybe it's an illusion that there will ever be some consensus, but for the time being, this is important to us. We will continue to monitor that debate, and if there is any reason to reconsider, we definitely will do so. By the way, The whole system of defining targets, etc., for us is not so much, making a fuss about things. It is an instrument of a very mature dialogue between supervisors and managers as to what goals we wish to realize, and we are completely in line with what Herman Dijkhuis has said, that we move towards the middle and long-term goals, so not the annual results, but are we on track when it comes to the main structure? Then, Mr. Bakker, I wish to make the following statement. You have said a number, which is a huge number, but I do believe we need to distinct between what primary salaries are over the past year, for example, and what the other elements are that relate to the IPO. It is very common that when there is an IPO for any company, not only a bank, but any company, that there is a certain value attached to the fact that there is continuity of management, and that is, of course, achieved by having such a retention package. It is what it is, and it's not coming back. Then the other remarks made, I want to be cautious when it comes to the position. The bigger the company, the higher the wages are of management, or should be. That is peculiar to believe that, because it would mean that it is more difficult to manage a big company, and the talent you need should also be bigger. And that is, of course, not true. And I can say that from my own experience after being here for several years. We do believe that the remuneration of the executive committee and the managing board is fitting for the difficulty in the tasks they have and responsible for. And I would like to leave it at that. Anyone else? No. Okay, I see that no one else wishes to take the floor. I conclude, therefore, that you have taken an interest in reading these reports, and this means that we now have item 3A. It is a proposal to adopt the 2018 financial statements. But before we do that, I want to give Mr. Van Loo the opportunity to have a very brief presentation on the activities of the external auditor in the light of the financial statements. And then you will have the opportunity to ask questions to him and the management board when it comes to the financial statements themselves. Yes, thank you, Chair, for this opportunity to talk about our involvement as the external auditor. Dear AGM members, I work for EY, and EY has been the external accountant for NIBC over the past year. And for this AGM of NIBC, I was exempted of my duty to remain confidential, and therefore I can inform you about our auditing activities. And I wish to do that. As such, I would like to talk to you about the scope. So what did we audit, our strategy, and how we approached our audit. And then, of course, I will talk about the outcomes, something called key audit matters, so the important issues that we focused on. And then, of course, something about communication and interaction with NIBC. So let's start with the scope. What did we audit? We audited the company balance and the consolidated balance and financial statement. Also, we looked at whether the annual report complied with the legal requirements. And of course, again, whether it is in line with what we know about the company. It's a legal requirement when it comes to auditing NIBC. And then the company also provided us with extra auditing assignments of reports, reports that the bank has to make to the regulator, also assessing the 6-month financial statement, and also what Mr. Dijkhuizen said about the content letters. What strategy did we use? Me personally, as the external auditor, I am the final person responsible, but I'm not alone, fortunately. To be able to take that responsibility, I have an expert team with knowledge of the industry. So we have auditors in the Netherlands and Germany. We also have experts in the team or on the team, EY professionals in the field of IT and taxes. Also, some other topics that we use specialists for, such as valuing financial instruments or derivatives, if you will, or collateral to determine credit loss risks, or when it comes to shipping, real estate, and also assessing an assumption when you need to make provisions for credit losses. It's relevant this year because, of course, the introduction of IFRS 9. Then materiality. The audits are focused on being able to provide a high degree of confidence, which means that the financial statements have to meet standards and have no mistakes of a materiality. So we focus on being able to uncover. And materiality is the degree of deviation that we accept as the external auditor. And not all items on the balance have that same materiality. For example, when it comes to remuneration of the board, there are only small margins acceptable. Materialities that we used in the audit 2018 is 13 million. So deviations above that amount, when we read and interpret the financial statements, will have an influence. And of course, we can only provide our own qualified opinion if we are in agreement. Of course, we do address all findings above 600,000 euros with the audit committee and the entire supervisory board. Then the execution. The main part of what we have done was in the Netherlands. But again, we also sent out instructions with our German colleagues to specifically look at defined activities in the German territory of the bank. By combining activities of my team, me as an external auditor, I was able to see almost 100% of the assets and tax obligations in my scope. So, the outcomes. Based on the audit and our findings, we were able to provide an unqualified opinion, which was included in the financial statements as well. Our auditing activities have resulted in enough substantiation to be able to provide the unqualified opinion. What does this mean? It means that the consolidated annual accounts, in compliance with IFRS, allowed by the EU, and also Title 9 of the BB2, gives the right reflection of reality, and also the company balance. And also, the annual report is in line with standards required by the law, and there are no material incorrect inconsequences or misstatements for that matter based on the audit. Then, referring to continuity, management of NIBC drafted the financial statements based on continuity, and also we took that as our assumption. We looked at solvency, liquidity, and we saw all of that in the financial statement. We did not see any things that led to reasonable doubts for us, for a true and fair view. In our unqualified opinion, which means that we approve, we report about 2 key audit matters in this case. Doesn't mean that, again, our unqualified opinion is a positive one. So, first of all, the application of IFRS 9 and the continuity and reliability of the automated data processing, so IT systems. First of all, IFRS 9. First year that it's applicable, and of course a lot of focus within NIBC for the provision of credit losses, which is fundamentally different in how they needed to be determined. Under IFRS 9, credit losses are based on expected credit losses instead of, in the past, incurred credit losses. It means a lot of extra work, not for us, but as well for NIBC. So again, IT systems, we dedicated a lot of our attention to that, the reliability and continuity of these IT systems. And as Mr. Dijkhuizen has already said, during 2018, NIBC was confronted with a number of challenges there. And in the light or context of our audit, we dedicated a lot of attention to that and considered it as a key audit matter. Again, this did not lead to a negative outcome. We have been able to provide our unqualified opinion approving of the financial statements. So how do we communicate with NIBC? Auditing the financial statements is a process, and it leads to several reports throughout the year. It starts with a draft of an audit plan. We discuss that with the management and the audit committee and the supervisory board. Then, after our interim audit, we draft a management letter, which is then discussed, and the management letter contains recommendations to management and supervisory board. And then in our audit report, we include detailed findings. And the Dutch law has, of course, requirements for the report, and therefore we also need to address the data processing, the automated data processing. So again, we talk to the supervisory board, audit committee, and we regularly meet. And we experience that everyone is very much involved and committed to what we find. Throughout the year, we talk to several departments, so not only the supervisory board or management, but also different business units within NIBC. And the relationship with the company is transparent, critical, they're receptive, and it's just good. And the several business units within NIBC have high standards and professional. We can say that both boards take our findings very seriously and that there is follow-up. Thank you for your attention, and Chair, I would like to give the floor to you.
Let's see, where are we? Well, first and foremost, are there any questions to the auditor or the CFO about the annual report? Well, more precisely, the financial statements. Mr. Jorna. Thank you, Chair. As I already said, I would have questions, and I'm looking at Mrs. Kemner, because I want to pay EY a compliment. This is the very first time I actually see a reference to a comment made by the auditor in a management letter. Whenever we ask what's in your management letter, there's always a defensive attitude. It's confidential. We don't share it. But this auditor actually says that in his management letter, he included a comment that in respect of the internal audits and the governance in outsourced IT process, that you could have tighter controls and tighter outsourced IT processes. So should we think to ourselves, stay in control of outsourcing according to the DNB, but the lines of defense, what are they at your outsourced parties? What about data breaches? And carefully checking, reviewing your partner requires a more intense control. Is it that the idea about the comment in the management letter? So if you do outsource it, have a tighter control, be more strict, look at it more carefully. He also recommends management to use a set of credit impairment triggers and use review and back testing to apply those criteria. Was it insufficient at NIBC, or was it sufficient? But there's room for improvement. Where actually are we within that process? So were the risk not such that continuity was at stake, but in respect of the annual accounts? well, the financial statements to be more precise. The owner mortgage loans in the Netherlands, 8614, that's billion, right? 8,460,000 and only 29 for Germany. So what's the difference? What creates the difference? Why in the Netherlands you pay more to or fund non-owners more than owners? So more about that, please. Now, savings. Once you raise funding in Europe, in terms of saving, you have to spend it. Now, if you look at what you collected in Germany, 4 billion, did you actually spend it in Germany, or is it cash and you don't do anything because you don't know how to dish it out? Last question about the financial statement. CET1 goes from 90.3, 8.5 you said earlier. Perfect, not a problem with it, but it is going down. What's the reason for the reduction? 90.3 to 8.5 or 18.5? 19.3 to 18.5. Any other comments in respect of the financial statements? If that's not the case, now the mortgage question I can actually answer for you. We fund mortgage loans in the Netherlands. So we grant mortgage loans in the Netherlands. We had a small portfolio in Germany once, but we're no longer active in granting mortgage loan. So we're phasing out that activity in Germany. Yes, we do have savings in Germany. You saw in our financial statement that it's not just sitting in some sort of account at the central bank, and Mr. Dijkhuizen will say more about it. First, about the auditor. Your comment about the governance when you outsource activities. Do you want to say something, Mr. Van Loo? Well, I can say the following about this, and I may disappoint you. Yes, I won't disclose anything further about the management letter. We're not allowed to, and you're familiar with that. In terms of IT, yes, we reported on it. It is prescribed by law. So I can't disclose anything on that either, but it is an item to focus on. We spent a lot of time on it, and in the end, we arrived at an unqualified audit opinion, as said. Mr. Jorna, well, if you state something under your observations, the key audit matters, you actually made a comment in your management letter. I cited that comment, and then I wanted to know more about it. So governance as a third party, what kind of issues were at stake? Because you say management pay attention to this. You said to me, it's in your management letter. Maybe I scared you off, but now suddenly you say, oh, I can't disclose anything about it. No, you're not scaring me easily, just so you know. But it's customary. Once you have questions about a management letter, and that is a practice in the Netherlands, I believe that our audit opinion speaks for itself. And if you want to interpret that, then talk to management. The management letter was addressed at them. All right, let me ask about key audit matters. IT, what did you mean by that? Well, as I said earlier, no, actually, as Mr. Dijkhuizen said earlier, NIBC had some challenges IT-wise, and I think those have been clearly described. Stop outsourcing. Keep it in-house, keep your IT systems in-house, bring them back in-house, resulted in additional work. And that's it. If you look at an audit over a year, the whole idea about key audit matters is, listen, as an auditor, I paid attention to these items. You want us to give a true and fair view of your financial statements, and those two stood out. And I think that's telling. We believe there was an important item to consider, and it ties in with what Mr. Dijkhuizen said earlier. I simply said it required additional work on my part. Fortunately, EY has IT specialists, and I was well supported by those specialists. And I believe that our work was sufficient to draw a conclusion. You're in The Hague. You are almost a politician. You're not answering my question. Jorna, well, let me explain my comment. You made an observation. I ask, what do you mean by it? Mr. Jorna, let's give Mr. Dijkhuizen the opportunity to comment. And if you have a material need to hash this out, then let's do it. Thank you. You read it perfectly clear. We made a conscious choice, and I want to make clear that it was a conscious choice to be fully transparent. You see this reflected in the report of the Supervisory Board. We chose to write down any issues covered by the management letter. We're not shying away. We're on top of things. And of course, when you try and manage any type of organization, there's always room for improvement. And some improvements must be made, and we actively go about this. Outsourcing. It's becoming increasingly important to this bank. In the past, we had our IT structure within the bank. We kept it in-house. Now we made a choice. Looking at the volume, the size of NIBC, a medium-sized bank, but the infrastructure, you can't keep it at the level you need to keep it at. So you need to outsource it to a professional party. But if I look at different routes and projects, and we are dependent on others, especially financially speaking as well, you need other parties to outsource too. And the DNB is becoming stricter when it comes to outsourcing, and we need to step up our game as well. And that's why we actually stay on top of this. Is it an 8 out of 10? No, there's absolutely room to improvement, and that's what EY says, and we took their comments seriously. The Audit Committee, Supervisory Board discusses this in extenso, and that's something you can expect from us. And that's what it really says. Additional question. You outsource to a party, right? Are they licensed in any kind of way by the DNB? Well, our party is a wonderful party, and they deal with various major banks, and we definitely looked at a reputable firm, so I'm happy with that question. It would be poor choice on our part to pick a party without doing our background checks. For us, it is very important that whenever we go through our processes, we follow the protocol. What do we want? And that protocol is becoming increasingly tighter. And we apply it, you can improve upon it, and you can make choices along the way. Is that your question? And an answer to it. Now, the credit review backtesting. During my introduction, I said fine-tuning in 2018 of IFRS 9. So if you transition into something that is such a fundamental change, it doesn't happen overnight. It takes more than 1 year. You have to raise the bar to a certain level, and you must make sure you meet that bar. So are you satisfied as an auditor? No. That was the answer. Can you improve? Yes. So 2019 will be used to improve, knowing that we couldn't achieve everything we wanted to achieve in 2018. Thank you for your answer. So together we could answer your question. Well, there's another one. No. 2 comments, Mr. Jorna, about Mr. Van Loo's presentation. We dealt with the mortgages. What about savings? Herman, how do you spend that money in Germany? Well, those savings, it's not ring-fenced. We have a German AG. It has ASF funding. That's German money. We can only use on German activities. We have a branch. That branch raises the funds, and we can use it for the bank as a whole, and that's how we organize things. So the 4 billion is for the bank, available to the NV. And what about the 19.3 to 18.5 degrees? Well, can I please get back to the Executive Board report on page 42? We gave you an overview of the value to loan ratio. IFRS 9 is a different kind of animal. Many banks had just one issue, and that was the debate we had about the valuation of the assets. But we had another issue. The majority of our old mortgage portfolio, before we repositioned ourselves, was valued at fair value through to P&L. And we wanted to get rid of that pain, if you will, that bottleneck. So in 2018, we just reduced that portfolio to amortized cost. And what does it mean in regular language? A mortgage, we sit on it till the very end. And if you stick with that mortgage to the very end, you expect your customer to have fully repay that loan, and that's a valuation of 100%, and you receive your interest income out of that loan. It had a huge effect on our balance sheet because we took out those mortgage loan at 4.5, valued above par, and we actually had to impair it, reduce it 3%, so it had an effect on our equity. So I compared the 1st of January, IFRS 9, to the end of December, IFRS 9, and then you see an enormous increase. So you have the old accounting system, the new accounting system, and then you see an increase.
Andere, hè? Oké. Zijn er nog andere opmerkingen?
So if that's not clear, I don't know what is clear. So an important moment, if there are no further questions. Let's actually vote and see if we can approve those 2018 financial statements. Shareholders present here, if you are willing to approve this, please raise your hand. Any votes against? Raise of hands, please. Any abstentions? Please raise your hands now. I confirm that this resolution has been adopted by a majority of the votes, and that brings us to 3B. Let's pay a dividend. 86 per ordinary share, 86 euro cents that is. Mr. Dijkhuizen said something about this, so did Mr. De Wild. Any comments, anybody wishing to speak? And if that's not the case, let's simply vote on this item as well. Those in favor, raise of hands. Those against, raise your hands. Any abstentions? Raise your hands. No abstentions, no votes against. And I confirm that the resolution has been adopted by the required majority of votes cast. Interesting point now, the discharge of the members of the Supervisory Board and the Executive Board. But first and foremost, let's talk about our board, the Managing Board to be more precise. The Supervisory Board recommends discharging them for their policy over the year 2018. Any comments? Anybody wishing to speak? If that's not the case, let's vote on this item. If you're in favor, raise your hand. If you're against, raise your hands. If you wish to abstain, raise your hand. I confirm that this resolution has been adopted by the required majority of votes cast by the general meeting of shareholders. So discharge of the Supervisory Board members. Any questions, comments? No one? Then please, those in favor, raise your hands. Those against, please raise your hands. Any abstentions? Please raise your hand. If that's not the case, I also confirm that this resolution has been adopted by a required majority of votes cast, and I can thank you for your support to both the Management Board and the Supervisory Board. That brings us to item 4 in the agenda, and that is a proposal to adopt a system to annually adjust the remuneration of the members of the Supervisory Board. As I said earlier, the Management Board, we already implemented a system of annual adjustments, basically follow the wages of the employee. be in line with those developments, and we believe it should apply to supervisory board members as well. So here's what's at stake. You, as shareholders, are you willing to approve such a system? And if that's the case, we will apply this annually. And we will also calculate the figures and inform you of those calculations. Anybody wishing to speak on this point? If that's not the case, those in favor, raise your hands. Those against, raise your hands. Abstentions, raise your hands. Not the case, so I confirm that this resolution has been adopted by the majority of votes cast. Thank you for this. Composition of the Supervisory Board. Mr. Krisner will step down, and that is, you see us all on these pictures, by the way, but the ones on the right, come back with this picture. So those on the right, Krisner, that's the middle guy, he actually does exist. Michael, please stand up. He's over there. So he's reached the end of his term, and we would like to nominate him to reappoint him. But process tells you that you have the right to put forward a proposal. Would you like to use this right? Do you want to make a recommendation, or do you have questions? Mr. Jorna. Thank you. I am Mr. Jorna. I represent the VEB. It's not about Mr. Krisner. It's about you. You are stepping down. No surprise there. Maybe there's some melancholy around it, but the search to fill that vacancy, it has started, right? I hoped that you could propose a new supervisory board member. Nominate anyone. We all read, we know it's difficult to find a supervisory board member of your level. Let me add to that freely. But is it that difficult to find a candidate, or did you start late in the game trying to replace him? Mr. Sluimers, he will be your successor. So I looked at his package. Sluimers, to be precise, is very active. He's AXO, NIBC, the chair, Atrarius, Euronext, chairperson as well, and 2 English companies. So your successor, does he comply with the legislation? And if he's in compliance and you look at the spirit of the law, do you still comply? Because we heard at ABN that a supervisory board member should be somewhere or spend somewhere between 65 and 120 days. So if you look at all of his duties, is it not too much for one person? Well, first, let's look at Mr. Krisner, and can we actually relieve him from his duties and reappoint him? Would you like to speak about the nomination of Mr. Krisner stepping down? So there is a proposal on the part of the supervisory board to reappoint Mr. Krisner for another period of 4 years. No further questions. I would like to vote on this right now. Who's in favor? Who is against? Who would like to abstain? No one? Congratulations, Mr. Krisner. Michael, I am very happy that you have been reappointed and that you can join us for another period. We were very happy with your contribution over the past few years, very valuable contribution, and we're happy to have you in our midst. Mr. Jorna, your further questions. True. The vacancy that is created by me stepping down, we are searching for a successor, not necessarily to become the chair, but the chair of the audit committee, ordinary member of the supervisory board, we did start it, not yesterday, we started quite a while ago. We're talking to various candidates. And we're making progress. But at the same time, and this is exactly your point, there are some thoughts at the level of the legislators, interpretations of that law. What can you actually do? How many days do you have available to any one person to fulfill all those duties? It depends on the person, first and foremost. Do they believe they can handle all of these activities? And then you also have your external regulator. How do they see this? So we started these proceedings quite a while ago. We talked to various persons precisely about the tasks and how much time they would need to fulfill those tasks. And we can actually nominate a person. We will probably convene an extraordinary meeting of shareholders to have this person appointed. Now, as far as Mr. Sluimers is concerned, yes, he does do a lot. And by the way, I did a lot as well in terms of duties and activities. So you could safely say that you're really looking for a supervisory board member that have many activities and duties. Why? Because of their added value. If you have a person who is active in society at various levels, your contribution is worth more than if you're just if you have just one membership of one supervisory board. So you're looking for people with a broad experience, not just in their past, but also in their current situation. And that applies to Mr. Sluimers as well. So you could safely say that at 2 points in time, we've reviewed him as a candidate. We first considered him as the chair, and we had some tough talks with him. Listen, do you have enough room in your own diary? And if circumstances change, could we claim more of your time? We internally reviewed it, and Mr. Sluimers arrived at the conclusion that he had to drop another supervisory board membership. And then we also looked at the DNB. How do they see this? And that assessment by the DNB, compliance with Dutch laws and legislations, that's assessed by the DNB, and they have a broad interpretation of their duties. I think you used the word society, so the DNB definitely takes a bird's eye view, if you will. And if Mr. Sluimers will be appointed as the chair of the supervisory board, then you know that the DNB consented to this and approved of this.
Kunnen we daarmee dit punt afsluiten?
Does that mean that we can conclude this item on the agenda? So meaning that we are now at item 7 on the agenda. Also 3 proposals, A, B, and C, all relating to, this is very common for any company, to have that extra flexibility for the management board, subject to the approval of the supervisory board. Right, okay. So it's about whether we would want to authorize the managing board to issue shares up to 10%. On top of that, the possibility to issue another 10% related to other situations, and then also the matter of providing the authorization to the management board to repurchase shares, all subject to the approval of the supervisory board. I'll go over A, B, and C. 7A. Any questions or remarks? If not, then we can vote. Who is in favor? Who is against? Who abstains? I therefore conclude that this item on the agenda has been adopted. 7B then. Anyone wishes to take the floor? If not, who is in favor Please raise your hand. Who is against? 1, 2. Please fill out the form correctly. We will include that in the minutes. And who wishes to abstain? Nobody. Concluding that this item has been adopted now, and then 7C, which is authorization to repurchase shares. Nobody. Who is in favor? Who is against? Who abstains? Again, I conclude that this item has now been adopted with a vast majority of votes by the AGM. Then item 8. It is a proposal to appoint E&Y again as the external auditor for the financial year 2019. Who wishes to take the floor? Nobody? Yes. Go ahead, sir. My name is Abraham, sir, and I'm a private investor. What I want to say under this item is, doesn't it make sense to immediately appoint E&Y until 2020? Because now appointing them halfway through the year 2019, I mean, it would just be very common. And I think we will all agree, looking at there's one major shareholder, but why not create that sense of security for 2022? I don't know why we shouldn't. Any other remarks? Thank you, sir. If there are no further remarks, then I'll try and answer your question. Ever since we attracted E&Y as an external auditor, every time we appointed them for 1 year. So it has just become a habit to us to appoint them every year, so on an annual basis. So it's the continuation of existing policy. I don't think there's much use now to deviate from that, because I wouldn't really know why we should to do that for 2 years. I mean, well, that would be then the one-off, wouldn't it? Someone says in the audience. Yes, but then again, you would have to consider in 2 years' time who you are going to appoint for another term. So we are very comfortable with the system we have right now. Appointment per year. So again, appointing an external auditor, reassess the relationship with whichever company we would like to use. But again, we will talk to you as a shareholder whenever we wish to decide. Yes, then I would like to ask the AGM to vote. Who is in favor? Who is against? And who abstains? So if that's it, then I can conclude that the required majority has adopted this item on the agenda. Brings us to item 9, which is any other business. And my question to you is, of course, who would like to use the possibility to raise issues in this, under this item on the agenda? My name is Se from Amsterdam, and I have 2 questions. Big banks in the Netherlands implement instant payment, and I was wondering whether NIBC is also working on that. Second question, did I learn correctly from the CFO in the presentation that the interim dividend upcoming will remain on the 25 cents? Because usually with other companies, it's always expressed in a percentage of the of the 6 months preceding to that. Very good, thank you. Instant payment. I think the answer is yes, just yes. We are fully involved. And then the dividend matter, is it 25 cents or is it 25% of the half-year profit? No, we have disclosed that our intention is, again, under normal circumstances, because we really don't know what the world will be like in a couple of months, we are going to pay out 25 cents. And this is a conscious decision to avoid any discussion, whether it's a percentage, is it going to be 51.1, etc. We want to avoid that, so we say that it's just a fixed number of euro cents per share. Any other people who wish to take the floor? If not, I have heard that there is someone who wishes to say something, which is Mr. Sluimer, and Mr. De Wilde also wishes to address. Yes, I would like to answer the question on Trimex, because now I have the answer in front of me, because then we're completely up to date when it comes to answering all the questions. Trimex is a company that is a supplier for the chip industry and focusing on cleaning chips and wafers, so the equipment that comes with it, and also accessing this equipment, so making their lives longer. And that's actually all I got. So I can't answer any other questions that relate to Trimex. That's it. But I think it's very clear, of course, why he wasn't able to answer this question. It's very specific. Okay, Mr. Sluimers, the floor is yours. Ladies and gentlemen, dear Wim, after 2 + 14 years, so a total of 16 years, we are going to say goodbye to you as a chair of this supervisory board, of which 9 years you chaired the board. And he started in 2010, ladies and gentlemen, and at that time it wasn't easy for any of us in this bank. And I think it is typical of Wim. He took that responsibility on him. You are now passing on your duties to me, and despite all the duties we have, I am in a much better position than Wim was back then, than Mr. van der Goorberg back then. And yesterday we already had a farewell within the confines of the bank, but I would like to say to you and Mr. van der Goorberg, dear Wim, we are very sorry that you're leaving. I think someone said nostalgia, but we are going to miss your expertise and your wisdom. And of course, your great sense of humor. And you have chaired this meeting excellently. And as a token of gratitude, I want to give you a lovely bunch of flowers. Yes, thank you. There's only one bunch of flowers, and I don't know whether I should offer it to Mr. Sluimers because of his new duties, to wish him luck, you know, with his position as a chair, and that's something the supervisory board takes care of itself. But thank you for your kind words, and it's actually quite remarkable that I now find myself in the company of you as shareholders, who went through all the trouble of coming to this meeting today to be able to say goodbye in such a way. We know that a company like this, a situation in which we also have a majority shareholder, then this is quite a remarkable structure for all of us. And for other listed companies, I was always very much impressed with the involvement of private investors here as well, and the quality and level of questions that you ask. Because that is important to us, to both boards, to stay in touch with what goes on in the market. So I would really like to thank you for your contributions to the discussion, and I would like to ask you to hand in your voting forms, to do that with Ms. Janssen. And I now formally close the AGM, and we hope to see you very soon, actually, to appoint a new supervisor. Thank you very much.